Welcome to the Skilled MBA Finance Case Study Series, your destination for practical insights into business strategy, finance, and leadership. In this episode, we explore the dynamic journey of Hannah Andreotti, a rising leader in private equity. Her story unveils the complex world of deal structuring, where financial engineering meets strategic vision. Tasked with managing investor expectations and navigating sensitive ownership dynamics, Hannah executed a high-stakes acquisition with precision. Her approach highlights the critical balance between value creation and relationship management in entrepreneurial finance. Through sharp analysis and disciplined execution, she transformed complexity into opportunity, a lesson for every finance professional. This case study delves into the intricacies of deal structuring in private equity, managing investor expectations, and balancing ownership dynamics. It highlights strategies for creating value in high-stakes acquisitions, offering insights into the challenges and opportunities faced by professionals in this field. Hannah Andreotti, a former J.P. Morgan investment banker, brings her extensive deal-making expertise in the automotive sector to the table. Recently made redundant, she is now pursuing entrepreneurial opportunities through a management buy-in. Her ambitious goal is to acquire 32% equity in EcoVolt Automotive, targeting a 30% internal rate of return for investors. EcoVolt Automotive, a leader in premium electric vehicle components, presents a compelling acquisition opportunity. With the electric vehicle market's rapid expansion, EcoVolt Automotive's growth potential is significant. Their innovative products and strategic positioning make them an attractive target for investment, promising substantial returns as the demand for electric vehicles continues to rise. Hannah identified EcoVolt Automotive as a prime acquisition target due to its robust fundamentals and growth potential. She secured financial backing from private investors to fund the acquisition, aiming for a 32% equity stake and management control. Her strategy focuses on implementing changes to achieve a 30% internal rate of return. Navigating deal structuring challenges involves securing an optimal mix of senior debt and mezzanine financing. Balancing ownership is crucial, ensuring meaningful personal stakes while satisfying investor demands. Additionally, meeting the valuation and liquidity needs of EVA's founding family is essential to align interests and facilitate a successful transaction. Family inheritance issues often drive mid-market buyouts, adding emotional layers to negotiations. Beyond financial aspects, Hannah must address complex family sentiments and align investor profit motives with the selling family's legacy concerns. Balancing these dynamics is crucial for a successful transaction. Hannah employs detailed revenue and cost projections to ensure robust financial modeling. She conducts internal rate of return simulations across scenarios, stress tests, debt service coverage ratios, and implements tax optimization strategies. Additionally, she analyzes equity dilution to balance investor returns with personal ownership goals, ensuring a strategic capital structure for the acquisition. Hannah seeks to maintain significant equity while attracting investors who demand a 30% internal rate of return. This necessitates precise financial structuring. The founding family requires a fair valuation and liquidity, ensuring their needs are met. The acquisition strategy must also facilitate economic value-added's growth in the electric vehicle market, balancing personal ownership with investor expectations and business expansion. Hannah must strategically balance senior debt, mezzanine financing, and equity from external investors to optimize capital structure. This involves enhancing equity returns through leverage while ensuring debt service sustainability. Maintaining personal ownership and distributing risk among stakeholders is crucial for achieving a sustainable financial model. Entrepreneurial intuition must align with financial rigor through technical valuation methods like discounted cash flow, multiples-based approaches, and leveraged buyout modeling. Market insight is crucial, focusing on industry trends, competitive dynamics, and growth opportunities. Effective relationship management is key, fostering trust with sellers, investors, and debt providers to ensure successful deal execution. Aspiring dealmakers must adeptly manage personal risk, balancing their roles as operators and investors. They need to harmonize ownership and control, ensuring equity stakes align with management authority. Effective negotiation with legacy owners is crucial, respecting their vision while structuring optimal capital arrangements to satisfy all stakeholders. Hannah's journey highlights the necessity for private equity professionals to excel in financial engineering, leadership, and entrepreneurial vision. Mastery of technical skills is crucial for structuring deals, while leadership aligns stakeholders. An entrepreneurial mindset identifies growth opportunities, and personal resilience is essential for navigating career transitions. Balancing financial imperatives with human factors is crucial in private equity. Hannah must ensure that the deal is financially viable while considering the needs and motivations of all stakeholders. This involves strategic negotiation, empathy, and a deep understanding of both market dynamics and individual aspirations to achieve a successful transaction. Thank you for joining us. For further learning, connect with Skilled MBA for insights into private equity, deal structuring, and financial strategy. Subscribe for more real-world lessons. Mobile, plus 91-8 7553 00795. Email, support@skilledmba.com. Website, www.skilledmba.com.